the rise in yields actually does the Fed's job for it. Would you agree with that?
That is actually how it works. The bond market has tightened quite considerably, over about 36 basis points since we met in September. Well, that is equivalent to about a rate hike. So then the need to do tightening additionally is not there. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
All right, so yeah, we got the bond market tightening for the Fed. So that's Fed Mary Daly from San Francisco basically communicating, and she's just one member, that the bond market has tightened for the Fed. Does that take the rate hike off for the Fed? It's tightened significantly. I think we see peak rates tomorrow. Oil is starting to come off. Let's take a look at this oil chart. We have a video to get to. Stay tuned. We're going to go over Tesla. We're going to go over the stock market technicals. But oil, right, that is the golden goose. We've been talking about oil being the most important chart, and it's now starting to pull back pretty sharply, right? It's starting to have a pretty sharp pullback here. This was much stronger than I thought it would. You see that RSI back to the lows. Now it'll bounce, it'll consolidate, but for the most part, you got $100 oil up here, right? Which was the main concern. You get $100 oil up here, and we never reached that. Now the trend is starting to break, and that was a pretty significant down move in oil. What does that do? That loosens financial conditions for the consumer. Tighter oil tightens look at higher oil. What it does is it actually pushes you closer to a consumer slowdown. But now that oil's pulling back, we also got the weakest demand, and we're going to watch this video in a second here, where one of the analysts, I don't know where he's from, he talks about why oil demand is starting to plummet and goes into detail. So we're gonna go over that. But look, oil pulling back is the perfect scenario, the perfect setup for the S&P. Now let's move over to rates. We've had rates pretty tight. This is I guess we had this before, but rates are starting to fall from these high levels. This is the 10-year benchmark rate, right? The real question is, where's the peak? Where's the peak? Well, if we do get a range here, okay, and this is sort of what you got to take in mind here. If we get this year-end rally for the S&P, and the reason that we talk about the year-end rally is because the S&P is oversold. It's extremely oversold, right? And if you get rates start to come in this range, they're at the top of the range. Maybe this is the top. I think tomorrow kicks it off, right? We have ADP payrolls coming in weak. Employment is probably the biggest indicator going forward for the bond market, right? It's not going to keep surging if employment is weak. And I think we do get weak employment numbers going forward. So if this is the range that the bond market sort of sits in, then we're going to be in pretty good shape here for the stocks, right? For stocks anyways, for the next 3 months, I think. So let's say we play in this range. The market can absorb those rates. It's been absorbing those rates. Certain companies have: Apple, Amazon, Google, Meta, Facebook, Tesla. They've been absorbing the rates. The companies who are not interest rate sensitive can absorb these rates, not the whole market, right? Jumping over to the VIX, volatility came back down for the second day in a row. And then we look at NASDAQ volatility. I guess it is sort of picking up, but it hasn't been as bad as the S&P volatility. Now, big indicator here, the MOVE index. If this might peak also. The MOVE index is bond volatility. You don't want this going up. Bonds can stay, the rates can stay elevated, but it only hurts liquidity. It does pull liquidity out, but it really hurts lending if you see the MOVE index move up, because what it's saying is we're going to increase the amount of interest on the lending for the banks. That's what that indicates. So, you don't want this moving up too sharply because it's risk. They're less able or less willing to lend, and if they do, those rates are much higher. So let's take a look. When I say that we're going to have a relay here, we're going to hand off to the first leg of the bull market. Let's take a look at SPX here. Okay. Now we are oversold. We've been oversold now for what? About a week. We've been oversold for a week, and we're going to rebound. It's going to rebound. The question is, do we roll over? So if you are saying, well, it's going to roll over, we don't know yet, because if yields have peaked, the S&P is going to break out. It's going to break out of this range that it's been in since the peak in late July. We've been in this range. So I think we're going to break out of this range if we do get peak rates, if the dollar rolls over, if oil continues to, fall down there, but the economy does not break. And we're not seeing, the economy is not breaking. Look, keep this in mind right now. I know people are saying, oh, the economy is going to break. but keep this in mind. Economic activity is picking up in the manufacturing sector. Initial jobless claims. I know we're expecting unemployment to start spiking, and maybe it does. I don't think it spikes yet though, because it is holiday season. We're looking at holiday spending here. Halloween, right? What do we got? What else we got? Halloween, Thanksgiving, Christmas, holiday spending, Black Monday, right? Amazon is expecting like $12 billion that day. So I think we're still going to get more spending. Yes, there's layoffs. Yes, there's a rolling recession, but there's also rolling expansion. So I don't expect real initial jobless claims to spike until maybe Q1 of 2024. And then I expect Joe Biden or POTUS, whoever's in the White House, it's going to be him probably, unless he dies out, to come in and start stimulating again, to start giving transfer payments to people who are weak. Why? Because he wants votes. And so I don't know if that's going to happen, but it seems like the playbook, that'll be in the playbook. So the point is, initial claims are not spiking. We're not seeing that. Economic activity is picking up. Productivity is picking up. So economic growth is set to pick up here. It is set to pick up at least for the next couple of quarters. Okay. Now let's get over to that. Because really, look, oil's a big factor here. It is a huge factor. So I want to go over this this analysis. Who is this guy from Sankey Research? I remember him. He's the one that kind of gave me the idea back in the day. The idea, I think about a month ago, that Saudi Arabia and OPEC can't keep cutting production because they're going to give demand. They're going to give over market share to these other non-OPEC countries, right? And if they do that, they don't have really control of production anymore. They're going to hand over that production. So let's dive into this. Make sure we can hear. Let's get that up. Let's put it here. Let's go here and then let's stop it. Nope, back up. All right, let's get into this. Let's listen to this guy. Let me know if you guys can hear that. You should be able to hear. Let me double check. Oops. Let me double check the audio. Yeah, audio should be working. Suck with this stuff. All right, let's go.
Get his take on oil's move, I guess, starting with yesterday, Paul, and what that told us.
Well, yeah, I mean, you hit several of the major points right there, which is the consumer weakening. The major issue has been gasoline demand. The gasoline crack has absolutely cratered, really remarkably, and that's telling you.
Look at gasoline demand is cratering in this next reading. The demand in the U.S. is cratering. Hey, really quick, Slime Z, Dimaj, let me know if is the audio working there? I just want to make sure, double check, so you guys aren't. Let me know if it doesn't work. Okay. All right, so this is Paul Sankey. So he's saying so far that the demand for oil is falling apart in the U.S. It's not going to crumble because, of course, we got the spending season, but it is coming down.
That Saudi pushed the oil price too high. So essentially, that's what's caused gasoline cracks to collapse. And additionally, as you mentioned, you've had very weak demand. So we're coming in. We've called the peak in U.S. gasoline demand here in 2019. What we're looking at here is very weak demand. As you have a weakened consumer, a strong dollar. There's a lot of things working hard against oil here, and that's why we're selling off so aggressively.
Does OPEC respond again?
Well,
so keep that in mind. Here's the other part against the oil price, right? As the dollar moves up, that is negative for oil, right? Oil's priced in dollars. As the dollar climbs, that pushes down oil prices. Plus, demand's coming off. I was telling you guys, oil cannot keep this up. It could, but everybody's long oil now. So now that trade's starting to unravel. I believe Goldman is shorting oil and going long technology stock. So yeah, we'll finish up here.
That's a major problem for OPEC because Saudi's now at 9 million barrels a day. It's already got 2 million barrels a day of spare capacity. Does Saudi go actually will force the market to stay higher by going down to 8 million barrels a day? They've done that in the past, but the problem for them is they're losing a tremendous amount of market share. What the administration has done here is it's shifted from using the SPR to pressure prices to using geopolitics, to allowing Venezuelan exports, to allowing Iranian smuggling, to turning a blind eye to Russia. All of those things haven't.
Right, you guys hear that? That is the key here. Shout out to Josh Dobson. He says, my thoughts is they will keep pushing up gas prices regardless of oil, pushing us to green energy, possibly in the short term here, right? I think going into the fourth quarter here, I think we are going to slow. Now that's my thoughts. I think it's overdone. I think the psychology, people are overweight gasoline. They got too bullish on it, just as usual. Once everybody knows the trade doesn't typically actually work out. That's not how it works. It usually does the opposite. Now, You guys probably missed what he said because he's talking pretty quickly here. I'm gonna I'm gonna actually show you why he says this. Weak oil. Okay, here's the reasons for weak oil here. He says that the U.S. shifted. This is key here from geopolitics, right? The U.S. has shifted from the SPR drain. Remember, they were draining the SPR, which was putting more supply online. Plus, we're creating more supply. I really don't think oil gets above 100. Maybe it goes back, right? And they're shifting to geopolitical tactics, allowing Venezuela to export, which that was part of the sanctions. Now we're allowing the export. We're allowing Iranian smuggling. Now I can't fact check this. This is this guy. Go check out Sankey Research. Allowing the Iranians to smuggle more oil, turning a blind eye to Russia, more oil deals, which allows more oil supply from those sanctioned countries. So basically the White House is saying, well, shoot, we can't suppress oil prices anymore. It's going higher. So let's go ahead and use our geopolitics. Let's allow this other stuff to happen so we can get more oil supply, because that is the biggest threat to the next election. That's the biggest threat to getting us back into the White House. And I agree with that, right? U.S. production strong, U.S. gasoline demand very weak. He expects prices to go lower, at least going into this first half. Now, if the economy weakens in Q1, it's going to go further. It's going to go further. So that's the argument against that, Josh, is that they're using geopolitics to allow more supply to come in. Look, OPEC can't continue to cut production. They can, but they're losing market share to those 5 other countries. How long will they do it? They're hurting themselves at some point, and I think they really just want the dollar to go lower.
Hasn't really been appreciated by the market, I don't think, but essentially have allowed for much more oil supply from sanctioned nations.
And where are we in the U.S.? I mean, are we right around 12 million in debt, something in there? Or are we expected to go higher? Or?
We're at record highs. I mean, as you know, the rig count is coming down, so that's unlikely to go a lot higher. But I would say that U.S. production has been very resilient, especially given the oil rig count has been down quite a bit.
Paul,
so U.S.
Sarah.
is doing well. And by the way, the other thing that you've talked about is the dollar. And of course, with us now being huge oil exporters, even huger gas exporters, you've broken the relationship to the dollar. But we say that really nervously because, of course, now we see a strong dollar and suddenly oil's collapsing. And you're like, actually, maybe this is a major issue because, of course, in India, in Brazil, in China, dollar prices for oil are very, very high.
Sure.
Turkey.
Sarah's
I mean, it's no, my question is really just on the price action.
Yo, that's the other piece that we were speaking about yesterday, is the dollar going higher is also pressuring other countries. They're indebted in dollars. Keep this concept in mind. 80% of the world is in debt by US dollars. So as the dollar goes higher, their interest payments go up. As their interest payments go up, they get closer to defaulting, and we get closer to them, waving the flag to say, hey, central banks, U.S. Central Bank, Fed, can you guys send us some dollars? We need more dollars. We'll pay you back in interest. That's how it typically works. And you're going to see those dollar swaps. We talked about this yesterday. We're going to see the swap lines open up. Trump used this back in 2020 after the collapse. He said, okay, well, you guys are going to do what we say, or else we're not going to give you dollars. Your economy is going to collapse. So dollar swaps actually really rose in October of 2022. And that's when the dollar was at peak levels. We're not there yet, but the dollar was at peak levels. It peaked out. And I think what it was is, hey, other countries need more dollars because as the dollar goes up, they're starting to default. They need more liquidity. So we opened up that liquidity and the dollar dropped. Why? Because we increased the supply of dollars, right? So that also gives you reason for the dollar to come lower. And this is all, the backdrop here is Santa Claus rally, year-end rally. Why? Yields have peaked. More than likely, they're peaking right now. Oil has peaked, at least for now. We'll see if it gets back up there. Oil has peaked. The financial conditions have peaked. They've gotten very tight for the Fed, and now they're starting to peak. And consumers will keep spending, right? For the most part, they'll keep spending here into the year end and then fall off a cliff maybe in Q1. I think they do eventually because a lot of people are making very bad decisions. But for the most part, the market's going to rally in certain segments, okay? Everyone on this planet wants the dollar to weaken. Yeah, that's true. Even if you're risk assets, you want the dollar to weaken. The only people that want the dollar to strengthen really is probably the U.S. and the Fed, because it's sort of, what does it do? If the dollar strengthens, we have other countries at their knees. Okay, but it doesn't help asset prices though. It helps the economy, but then you're going to flip that so you don't cause a global recession. So it's always a balancing act. Right? Anyways, oil's coming lower. for the most part. This is what this guy believes. He believes oil's coming lower, and that there's a reason for this big pullback. That was a gigantic pullback in oil there. Okay, that was a big. We were at 95. We were at 95, and let me see. Let me double check here. We're at 95 now. When you do get sharp pullbacks like that, typically they do bounce. 95. Yeah, we got up to 95. We're at 82. Holy smokes, that was a big drop. So typically you do get a rebound. The question is, do we rebound and get back to the highs and go higher, or do we kind of slug, are we sluggish, or do we muddy around in the gas price, in the oil price, right? Who knows?
You're talking about it like it's normal supply and demand type movers, but Brent crude oil was at 97, above 97 last week. We were talking about $100 a barrel oil, and now we're back down to 95. I mean, these are abnormally large and volatile moves, aren't they? What accounts for that?
They really are. Yeah, I mean, it's a massive move. I mean, after 30 years covering oil, I was around the last time we had a drop that big, but as he said, it's a good long while since we had that. At this level, as you know, machines trade the market. I think it's very much a risk-off move. The market just decides to dump. We thought maybe that we could go higher on speculative interest. So the speculative interest before this run was very low. We got up to neutral levels of speculative interest, and our view was that our shot at 100 was that speculators would pile in. The problem is, as you know, risk-off turned into risk-off, and that became, the speculators running for the exits again.
Also, look, when bond yields climb that tight, when bond yields increase the 10-year, at least on the long end, they tighten financial conditions. Oil traders have to keep that in mind. Well, financial conditions are tightening, and that actually puts oil down. That actually reduces energy usage and demand there. So I thought this would happen. I said, hey, this is all a trade. I think the big move in oil is a big trade, and everybody unwound at 95. They unwound before you got to 100. So I hope you got out of your oil before got out of your long before that collapsed. It's market psychology, right? They're not always connected with your theories. So things change in between. I think that's what happened. That's what he's explaining there, is that a lot of the trade, they got short because everybody was long, right? Everybody's long, they get short. So what are we seeing today right now? We're seeing S&P, everybody short. Fear is at a record level. Fear is up, especially for the crypto market. We are at extreme fear, and that's a good setup for blow off top, especially if these yields have peaked. So I think the yields have peaked. We'll finish off to hear what he's saying here. But the two main ideas, right? The two main things are that yields are tightening for the Fed, and they might have peaked in the intermediate, right? They might have peaked for this month at least, going into November, which is going to spark a rally. Number two, oil's coming off, so that eases conditions for the consumer to keep spending, or at least macro. It eases macro for a little bit. It takes that inflation off the table. So if we're here in October, that means the November inflation, right? November inflation, the data that comes out in November isn't going to be that bad. It isn't going to be as terrible. We already know PCs falling is starting to come down. So inflation is making more progress, and we're setting up for a Santa Claus rally, right? And then after that, who knows? Maybe we go all the way back to 4,200.
And there's still a lot of things that can happen with oil. We don't know which way Putin's going to go. We don't know. Yes, this week we had an outage on a major Canadian pipeline that would have been significant. So you never quite know, especially not heading into winter. But the reality is that the single biggest element of the global oil market is U.S. gasoline. We consume not far off 1 in 10 barrels just in U.S. cars. When it's as weak as it came in yesterday, and it had already been weak the week before, it becomes a major problem for the global oil market.
So look, U.S. oil demand is weak. And what's part of that issue? What's part of that? And I think we do accelerate a little bit because we're headed, into November holiday spending. But if you think about it, all these, vehicle prices are so expensive right now. Oil, when prices go up, people do not buy more. They don't use more. When prices go up, people don't use more gasoline. They use less on net, right? They use net. Now, obviously, if you're on a job, you have to keep doing it. Your expenses go up. But on net, people are going to slow down. So that demand is coming down while our supply is picking up. At some point, that's going to match. And there's going to be a deceleration in oil. Well, maybe it just happened. Maybe that's it. Maybe this is the bottom in oil. Either way, right? That was what we wanted here for this Santa Claus rally. If we're setting up for a Santa Claus rally going into year end, and we're looking at S&P 500 as a proxy to our individual trades, or, as a proxy to, Tesla, if you're getting long Tesla, or I don't know about crypto. Crypto has its own narrative here, but if you're looking as a proxy here, this is a good setup. Look at NASDAQ, oversold. NASDAQ is oversold. This is bullish divergence, by the way. What is bullish divergence? When you have price making new lows, okay, look at new lows, while the RSI is actually sideways or picking up. And the RSI is actually sideways. It's been sideways since August, and now it's starting to pick up. The RSI, the buying pressure is picking up while NASDAQ is making new lows, and you're getting a lot of capitulation at the same time. Santa Claus rally, let's go, right? You're getting this capitulation here. We're going to go back to this trend. We're going to trade back up for NASDAQ. We're looking at, this is NDX. Oh, this is the equal weighted average. I'm not even looking at the real NASDAQ. Equal weight looks pretty solid, though. I didn't know it was that good. Equal weight doesn't look too bad. Let's go to SPX. I'm sorry. Let's go to QQQ. QQQ. Look at this distribution here, right? This is an accumulation of Qs. The Qs are being accumulated. You see the RSI starting to step up. We're going to have a rally. The question is, do we break out and have a Santa Claus rally, or do we just break out to the trend and reverse right back down? I think this is accumulation phase. I remember seeing this, back here when rates were extremely elevated. It looks the same. What did you get here? How does this look the same? You got to sell off, right? You got to sell off. This was before, no, this wasn't the banking crisis. This was the low. This is the last time we were at the lows, December. And you got this accumulation phase. Okay. Same thing. The RSI was at the lows and it started to move up. It started to move up where price was still sideways. Eventually got that blow off top. I believe yields peaked at this time. Watch, let's throw on yields. Let's throw the yields on there. No, I don't want bonds, bro. I want yields. U.S. 10-year yields. There we go. Oh, yep. Look at yields peaked. Exactly right here. I know that's a lot of writing on the wall, but yields literally peaked. I keep saying this, man. Peak yields are going to be the bottom of the market. Peak yields, bottom of the market. Now, I'm not saying peak forever. I'm saying at least for another cycle. If we're trading these cycles here, we're at peak yields. And that could actually follow through. We could get, severely peak yields. Also, maybe the Fed pauses because what did Mary Daly just say? Mary Daly, and now she's one person, right? She's San Francisco Fed. You gotta watch out for San Francisco. She's saying this is equivalent to a rate hike, right? Yields being this high is equivalent to a rate hike. So, the very bullish scenario here is that yields actually peak. The Fed pauses, gasoline stays sideways. Oil stays sideways. Gas prices ease. Inflation continues to ease. The dollar comes off because also the dollar peaked back there too. Dollar comes off. We get a Santa Claus rally. Then we reassess going into December and say, oh, okay, the consumer is going to fall off a cliff at this point. But then you got to also think, okay, what is the Biden administration going to do? I think they come out with more stimulus checks. The answer is always more stimulus, right? That is the answer. Oh, it's going to be inflationary. Maybe not if productivity keeps keeping up. I disagree with a lot of people here, which is they think anytime you stimulate, it's going to be fully inflationary. Not if economic activity is rising, not if productivity in the labor market is rising. If you get more productivity, it absorbs the inflationary pressures because your supply chains are strong. No more stimulus checks. Well, hey, there's a lot of people who are going to want them, right? It depends what position you're in. There's a lot of people who are in very bad positions. So yeah, I know you say no more, but it depends what position you're in. Also, you got to think of this. If the market has a Santa Claus rally, let's say we have a Santa Claus rally, Slime Z. So I'll get to your comment. If we do have a Santa Claus rally, let's take this RSI off. Let's put this on the weekly chart. Okay, because this is right now is what I think is going to happen. I've been saying all-time highs by year end. We're getting close. I think we break out. Let's say we go to all-time highs, right? Now we hit December. And then all the data comes in. Okay, we're closer to recession. The Fed's hiking comes into place, right? The market's going to pull back. And then you see growth really start to decelerate. And then what happens? And then you get, unemployment really start to spike, or it's probably already spiking. And you have job openings, falling even further possibly. And then, you're at risk for recession. So if the market falls and unemployment's at 4.2%, jobs are going negative, and then you send out stimulus checks, it's not going to be inflationary because the inflation is probably at the target at that point. Inflation's at target. So we can't predict the future. We can always put in conditions. What if this, then that. And I think if we do decelerate, if the business cycle does roll over, well, inflation is going to be done, and then you can send out those stimulus checks. Okay. And it really does depend. That's the perfect scenario, obviously, but it you never know because everybody's so bearish. Everybody expects a deep, dark recession, and usually that doesn't always. It's always a surprise that hurts the market. It's not this stuff that you can predict and you think is going to happen. It's always a surprise. So we need unemployment data to be positive in order for us to keep pushing. No, we need unemployment data. Well, I guess it depends what you mean by positive. I think we need unemployment data to stay where it's at, to come in as expected. Let's double check. What is the market expecting really quick? Where the hell is my data? Okay, there we go. Yeah, let's double check. Let's see what the market is expecting first and foremost. What is the market expecting? Because I said, I think we talked about this yesterday. The market, in my view, is going to be expecting the data to come in as expected, to stay strong as expected, or weaker in terms of inflation, or weaker for the bad news is still good news. So if unemployment ticks up, the market will be okay. Okay, it'll be okay. If it ticks up too much, not really. So the market is expecting tomorrow, not non-farm payrolls, unemployment to be at 3.7. Wow. So the market expects unemployment to come down. Wow, that's weird. We're expecting unemployment to come down. So I didn't expect that. I didn't really think about that scenario. I would think it was going up. I guess not. If it comes in as expected, that's actually a good setup for a bull market because it's as expected. If it comes out weaker at 3.8, that pressures the Fed to pause, right? So that is also bullish. If unemployment comes in super strong, let's say at 3.5, that's when the market will probably sell off if unemployment comes in way lower, because that'll be so confusing. What the hell? Or if unemployment comes in at 4%. Wait, so you don't want no drastic changes. You want it to be as expected or slightly better, right? Non-farm payrolls, who knows? That might come out really weak. What you don't want is average hourly earnings to spike. It's expected to come in at 0.3%. So as expected, or bad news is good news. That's what I would say. As expected, or bad news is good news. So we'll keep track on that. I'll probably send out something tonight for the numbers. I think these numbers come out weak. I think my view is unemployment comes in as expected or worse. Non-farm payrolls, I mean, we got private payrolls. They were way weaker than expected. Is that always a look into the future? Not exactly, but maybe we come in at 165, 150. The forecast is 150. The consensus is 170. They're manipulating the data, probably. We already read that, right? So they're probably going to revise this lower. Either way, I think we're oversold enough till we get a bounce in the short term. We get a bounce. If those yields do peak, then we'll sustain that bounce. We will sustain that bounce. Okay. What else did you have, Slime Z? Oops, no, I don't want that. So yeah, we're looking. That's what we're looking at. We'll see. I mean, it's a weird time. But at the end of the day, the big macro factor here is yields are peaking. Okay, yields are starting to peak on the short end. Yields already peaked. They're not going up, right? You still we didn't even get to liquidity. Check out liquidity. Let's look at liquidity. Liquidity is improving slightly. It's not getting worse. Is it the Fed's balance sheet? No, it's still falling. But this shoots up if something breaks. What is more likely to break? It's going to be the banks. It's going to be regional banks. They probably break first. If they aren't already breaking, it's going to be KRE, right? Regional banks, they probably break. Commercial real estate, they probably break. Small caps or interest rate sensitive companies, they're in trouble. Retailers in trouble. So that's that liquidity. Now, reverse repo facility making new highs. This is why I remain bullish, because there is shadow QE coming into the market, and it is dislocating away from price, right? When it comes to S&P, as those short-term rates are eaten up by the reverse repo, that caps rates, that provides liquidity on the short end, not on the long end, on the short end. So we still have shadow QE, right? And what else does that mean? Global liquidity. Wow, we got to bump up in global liquidity. Global liquidity. Why? China is not falling apart the way that everybody expected. China's not falling apart. Now, they probably have some entrenched weakness, but the numbers are still coming in pretty solid. So this is what I think is happening. Reverse repo facility money is coming in. China is coming in. Japan's still printing. A lot of countries are at the end of their tightening cycle. Therefore, liquidity starts to pick up in a global scale. Now, we need rates to stop going up in the US for this to continue, right? But we're at the bottom. We are at the bottom, and economic activity is picking up. New orders on the ISM is picking up. That is a leading economic indicator. New orders are picking up, not for services, but services have already been, moving higher. So now it's up to manufacturing to support the economy. Look at this. Fed net liquidity stepped up over the past couple days, right? And that is also while the move index picked up. So you got the move in, and I think this is exactly what's happening. The move index, which is bond volatility, spikes, not good, right? That's liquidity concerns. And what happens? Global liquidity picks up. Fed net liquidity picks up. Reverse repo liquidity picks up. Oops, that wasn't it. Here we go. So the Fed is still providing liquidity. This is why I'm bullish, because if something breaks immediately, the Fed steps in. We're going higher. Happened last time. If we look at history, okay, if they don't step in, I mean, they're going to step in. Let's keep it real. If it is a slow crash, I'm not as bullish. But if something crashes right away, now let's say nothing crashes. Let's say rates have peaked at this point, 10-year. I mean, that's also a very bearish candlestick. Oh, I don't believe in candlesticks. Okay, well, you don't know shit about them either. So the candlestick, that was a very bearish candlestick there. Okay, and we're moving below the next candlestick. We need to get below 4.67%. What's going to cause this? This is why I'm saying unemployment tomorrow. The employment numbers, I think, trigger the next rally. Unemployment. Bond yields are starting to peak. And if unemployment comes in higher, if we get a weaker employment report, this is it. This triggers the rally. But if employment comes in strong, average hourly earnings up, right? I don't think labor participation matters as much. Payrolls, focus on these two things. Payrolls, average hourly earnings, and unemployment. Okay? If they come out strong, then, yields are going to rise and the market's going to struggle. I still think we bounce because it's time to bounce, but it won't be that strong. Okay? Now, this is also tied to the dollar. But if employment numbers come in weak, that's it. The bond vigilantes will cover their positions. Yields are going to fall, increasing valuations. 30-year also, look at 30-year try to move up again. And the dollar's down for 2 days in a row, finally, right? We haven't had 2 days in a row since September. And we haven't had this big of a drawdown since August. So if we get the dollar to continue to fall and break this trend, because it's in a nasty uptrend at the moment. It's in a very, very systemic, nasty uptrend. Then I think the rally kicks off. At least the first leg to the rally starts to kick off. So keep that in mind. We are setting up for the Santa Claus rally. I'm going to keep saying it and saying it and saying it. This is the setup for the Santa Claus rally. If you're a long-term investor, you really don't care. You're looking for something to crash and to buy lower. But I'm talking to you traders out there, you swing traders, or just to educate yourself on how the market psychology could happen. Do I know exactly what's going to happen? No. But when I look at the forces, we can predict what direction and what's going to actually fuel the downside or the upside. And that's what we're looking at here, right? So we want the trigger tomorrow is weaker employment data, weaker than expected or as expected employment data. That is the trigger to get bond yields down. That is the trigger to get the dollar to weaken. That is the trigger for the market to bottom. And I think we're going to come off pretty strong here. Look, and then the bread of the bunch here, the real golden eye, right? The real killer. Hopefully I don't get banned for that, saying that on TikTok, is oil dropping like this, right? This is really constructive for macro. Why? Because future expectations of inflation are now lower. They're now low. They move day to day. These expectations are always moving. So now that oil has dropped a considerable, what is this? 13%. I mean, it's going to bounce, but now that it's dropped, now the future expectations of inflation are going to fall. That is very constructive for these fund managers who are stacked in cash, right? Who are still worried about inflation. Full part calls tomorrow. Would you say full part calls? I don't know about that. What up, Shuba? What up, Shubham? Are you a real person, Shubham? I don't know, man. I think last time you tried to ask me about something. Anyways, what up? How you guys doing today? Shout out to you guys. It is Thursday. I think, I think there's a really good chance the Santa Claus rally starts tomorrow and we get a violent rip higher. When this does start to I think we're going to get a violent rip. If it doesn't happen tomorrow, it's going to happen. But a lot of people are off sides right now. A lot of people are deep in fear territory, and we might get a violent rip. Why do I say might? The probability is pretty high here. It does come down to that employment report. Comes down to that employment report. And then we have on the other hand, we have, let me see if these 50-day, okay, there we go. So we're starting to get some capitulation here for the amount of stocks trading above the 50-day moving average. That slipped pretty bearish, but now it's starting to capitulate. This is a weekly candle, so we can't really trust it. But, we're getting some upside there. We're getting constructive. If you're a trader, you're predicting, you want to know where your stop is, but you're predicting the upside. Tesla, try to get over 160 today. Okay. It didn't. Okay. Ended the session below 160. We could get a gap up tomorrow. We'll see. But that was a nice push for Tesla. It did fill the gap and then it reversed. It filled the gap early in the morning, reversed, and then it bottomed pretty hard. We're actually going to look at Tesla price action over the past couple of days so you guys can see where the entry points are. And maybe we'll see that going forward. Let's see, what do we got here? So what are the expectations to the downside? No, we don't do downside expectations. No, I'm just kidding. Downside expectations are, unemployment comes in better than expected, as in it comes in lower, and average hourly earnings come out strong. Okay, that means wage inflation, even though I don't know if it's going to be that big of a deal, but you get wage inflation. And then you also get I think job openings. If anything really gets very bearish, it's going to be job openings. Not job openings. It's going to be payrolls coming out stronger than expected. If payrolls do come out stronger than expected, yields could start to climb again. The dollar starts to rip up again, and the market makes a new low. That's the downside here. The macro forces, looking at the data, that's the downside here. But still, there's going to be some relief rally at some point. It's going to happen. Now let's take a look over. At the expectations for the Fed, and then we'll go through. Let's double check, make sure we've gone through all these projections. So yeah, that's what we got going on tomorrow. Average hourly earnings, non-farm payrolls, blah blah blah. Let's double check. Let's see what. Let's see if the market's pricing in with the changes on the rate hikes. Any changes on rate hikes? Let's see. Oh, okay. The probability of rate hikes went lower. Okay. So, hey, it's a good setup. I think the bullish setup is a higher probability here. Okay. Yesterday, the probability for a rate hike was at 23%. A month ago, it was at 42%. Now we're at 19%. It is falling. Okay. It is falling. Why? Well, rates hike, bond yields might have done the hike for the Fed, as one of the Fed governors said. Okay. Also, jobs are the employment data has been weak this week. Okay. And that brings us to the actual what I said on Twitter. Okay, this kind of sums everything up. I know I go all over the place. I just start blabbering. But I think, Santa Claus, peak yields, peak dollar, peak oil, peak vol. Okay, volatility peaked, and we're going to get that market rally. Okay. Now this part, to be constructive, weak oil equals weaker inflation expectations. Let's just go through it. Weaker ISM services that we got, I think on Tuesday, was this yesterday? ISM services, those came in weaker. So manufacturing's recovering, but it doesn't signal inflation because services are weakening. So that doesn't get the Fed to hike. ADP private payrolls came in very weak, possibly weaker employment on Friday. Okay. The reverse repo still holding down 3-month to 2-year rates, short rates. Reverse repo, shadow liquidity still coming in. If yields find a range between October and December, so once we go through the fourth quarter, if yields just find a range, let's say they come back down and they just go range bound, equities I think can rally through that. Not all of them, obviously the blue chips, and because they can absorb the rate hikes, they can absorb them. How are they absorbing them? We already talked about this. They're going to absorb the rate hikes through money market funds. Oh, okay, you're at 5%. Well, guess what? We're going to absorb that because we can yield from the money market funds the same amount of rates. We can use those rates to fund our own growth. So those will get absorbed by the blue chips. Others, commercial real estate, retail, they're going to fall off a cliff. Something's going to break there. Bond vol should peak. Okay, we already talked about that. Oil is rolling over. Blah blah blah. Production is very resilient. Economy breaking. ISM new orders pick it up. ISM Services starting to cool. Jobless claims. Look, jobless claims, those are falling. Jobless claims are typically the closest thing forward looking to employment, and those are still falling. Those are not moving up. So that's a good sign there. And I think the consumer has one more push going into the holiday season, into year end, Halloween, Black Monday, Thanksgiving, Christmas, plus more fiscal from POTUS, Inflation Reduction Act, CHIPS Act, infrastructure. Still constructive. I know it's a lot of information, but still constructive here. Let's look at some technicals. Let's do a little bit of technicals here. Let me pull up my charts. What do we got? Any questions, any comments, any concerns? All right, let's look at the 15-minute. Let's go 30-minute. Let's go 30-minute here. Oh, yeah, look at that. You got Tesla just climbing the wave. Tesla climbing wave probably comes back to 256 there. But what I want to do the technicals first on the big indexes, obviously S&P. Okay, S&P. I got a lot of stuff set up there. I think S&P is bottoming out here. Let's check the trend. Have we broken this downtrend? We're starting to press the downtrend. I mean, technically we've broken out of it on the 30-minute, right? You see that? Oh, let's get this full screen. There we go. So technically we've broken out of the downtrend. Okay, for S&P. We've broken the downtrend. So we just need to hold this 422 level. Really comes down to 420. We got to hold 420, the magic 420 level. We got to hold that level. Jumping over to the Qs. The Qs are a little stronger here. It broke the level a while ago. I think this is very constructive. Broke that downtrend. We probably trade back up here to 370-ish. In the short term, we need to get back above this gap at 364. So you got a gap here at 364 for the Qs. Let's see, gap. There we go. There we go. Yeah, we got a gap between 363, 364 for the Qs. Keep that in mind going forward. Dow probably looks like trash. Even the Dow is starting to recover. I don't think it's out of the trend yet. Let's see. No, it's not out yet. Dow's starting to recover. IWM's probably going to struggle. Small caps, they're kind of screwed because they have to fund more. They have to refi their rates or borrowing. They have to refi a lot more frequent than mega caps. And what that means is they literally are using the variable rates. They have to refi at high rates. They're kind of screwed. So that's what that looks like. Again, for Tesla already broke that downtrend. Maybe it comes back here into 253. We'll see if that's the case. KRE still bleeding for the most part. Something's going to break there. Energy really got slammed. That's funny how everybody was so bullish on energy, right? I'm long XLE, and what happens? Boom. Energy drops like a rock. Now, the question for energy, is this a buying opportunity? Is it a buying opportunity? Do we buy, the pullback in energy? Well, if U.S. demand is falling, you better bet that OPEC is going to keep cutting production. If not, I mean, the energy trade is probably over, right? For the traders. Look, when everybody piles in the trade, when everybody loves the trade, it's close to being over. It's pretty much close to being over. I still think SMH is in pretty good, semiconductors looking pretty good here. Communications looks solid. Look, communications are solid. How do you know? What did you guys get on your phone yesterday? A communication alert, a federal communication alert. They are buying. I'm just playing. That has nothing to do with it. But they're basically, you can't get away from this. This is just a secular trend. Communications are the bedrock, the infrastructure for technology right now, right? Other than tech, obviously, but there's more discretionary tech. Like a Tesla car isn't necessarily what the government needs yet. I hear they're building, police cars over there in California, though. They want the Cybertruck, right? They want the Cybertruck. We'll go over some Tesla news also that I retweeted from Gary Black. So XLI industrials, these will probably recover at some point. Industrials will recover. They're not recovering yet, but they'll recover because they don't care about consumers. Industrial, unless you're an airline. Ooh, biotech starting to recover. Retails. Ooh, retail looks disgusting. Man, what I would do is go look at what's in this XRT. Go find a stock. Actually, we'll do that today. Let's find some trash, because when the market does bounce, there's going to be something to short here. There will be something to short. I actually wanted to do that. We just didn't go over it. Yeah, there will be something to short. Let's not jump over yet. Oh yeah, let's go over this Tesla stuff. Let's go over this Tesla trade. Hey, appreciate it. Who are you? Love at 786. Appreciate it. Appreciate it, bro. All you guys, appreciate you guys. Hey, I have a YouTube. If you're not familiar, go check it out. Go subscribe if you want to help me out. If you think I bring you value, if you guys do think I bring you value at all, don't forget to like, subscribe, check out the YouTube. I mean, I'm just trying to give some marketing. I think this is a Santa Claus rally. Maybe you're an investor, you don't care. If you want investments, if you're thinking what is the best investment to get into, well, you got to look at the secular trend, right? Who's going to benefit from this environment? Who's going to benefit from fiscal policy? Who's going to benefit when the Fed reverts, when they reverse? Who's going to benefit from the adoption of secular trends here? It's going to be Tesla, AMD, Nvidia, Apple. Like those are going to continue to go higher. Crypto is going to continue to move higher. I'm telling you guys today, I'm not saying do it. I'm just saying so in the future. Because look, everybody's screwed. What do I invest in? I bought GameStop and it fell on me. Yeah, because it's trash. Because it's nothing. GameStop is trash. There is no investment here. The only reason it spiked was because of a short squeeze. Oh, I bought AMC because everybody was doing it. That is trash. AMC is they have nothing going for them. Don't get scammed. Don't get scammed, okay? Oh, well, I bought Dogecoin. That's trash. Oh, I can't even find Dogecoin. It's USD. Dogecoin USD. Trash. Trash. Nothing going for it. Because Dogecoin, bro, it's just a copy of Bitcoin. It's nothing. Don't buy these trash things that people tell you to buy. Stop getting, and people just get so FOMO'd into it. Even my dad, he bought Dogecoin. I was like, bro, what are you doing? We told you not to buy that because his friends were buying it. Once everybody knows about it, it's too late. It's over. Oh, well, I like Shiba. Trash. You know what people don't know about? They don't understand Chainlink. Chainlink, building infrastructure. All right, before I go off on that, we're going to go over the Tesla technicals. I'm going to switch the charts here. For you day traders, I want to show you guys how I would get into a trade. How I entered Tesla yesterday. Okay, today I kind of screwed up. I took off a contract. I got scared. I took a contract off. That was stupid. I should have just let it hold. I put it back on, but the initial move was a mistake. You put on size, all of a sudden you get scared. But hey, I haven't put on size for a while. And especially yesterday was such a big move. So let's check this move out in Tesla. Okay. Let's break this down. Let's widen this out here. Number one, you had the market in your favor, I believe, yesterday. So that was the most important thing. If you're going to enter a position, make sure the stock you're trading has an RVOL above 1.5. Tesla's RVOL was 1.6. Relative volume, which means the average volume was at 1.6%. And you guys already know Tesla trades at a high volume already. So above 1 is pretty significant for Tesla. Not for some crap stock that's a penny stock that nobody trades when the average volume is 500,000. That doesn't matter. 1 million is not enough volume. Tesla's trading average like 50 million. So if it's at 1.5, it's 75 million. That's a lot of liquidity. Okay. So first off, let me take these off. First, you want to look at the previous day. Well, where was the previous day? The previous day had a gap here at 251.65. Okay. 251.65. So here's your gap. That's the PDC. That is previous day close, meaning the day before it gapped down and it never filled the gap. So there's a gap to fill for Tesla going into this day at 251.60. There's a gap there. Okay. And then number two, the overall market pulled into 218, which was the 200 daily moving average, and it bounced in pre-market. So, hey, Tesla's going to bounce. It's been stronger. If you've been paying attention, it's been moving a lot stronger than the S&P. It moved up pretty violently into pre-market. Okay, it did gap up. It did gap up in pre-market and it broke out. Now, I don't chase these moves. I did not chase this. A lot of people will chase that. I'm not chasing that. If you're going to chase it, you want to break above the pre-market highs. The immediate pre-market highs at 248. I wouldn't chase it, but hey, you can chase that if you want. I'm waiting for something to form. I want to see volume. I want to see a sharp move away from price. So we got that big move away from price. And then I want to see a pattern start to form. Did we get a pattern form? Yeah, we did. This was a, oops, let me change the tool here. We got the wedge. Okay. If you don't know what a wedge is, go to my website and check out trading and you'll see the wedge patterns. Look at that wedge pattern. Perfect. Wedge, wedge, wedge. Broke out of the wedge. Now the key here is inside the wedge, it's holding VWAP. You want it to wedge above VWAP. It got below VWAP and it also got above the previous, that gap, right? So this was perfect. It wedged above VWAP and the gap, and then it broke out. So you can either, I'm not going to tell you how to enter, but because that's a secret. But yeah, you got the support here on the wedge breakout, right? On descending volume, the breakout. Yes, you did. Check out that volume, big volume on the breakout. Okay. That's another key indicator, broke out. And then it forms another, it's not a wedge, but then it forms a flag pattern. If you don't know what that is, go to the website, go check out trading. Got the flag patterns on there. So you can identify patterns on how to enter. This is not a day trade. Okay, I'm not day trading. I'm getting an entry. I want to get the best probability entry for a swing trade. Okay, because now that I built up all this cushion, I've built up enough cushion where I don't need to be worried about anything. I don't need to be freaking out, right? So you had that cushion. Then you get another flag pattern here at the end of the day, broke out of the flag pattern with the EMAs, crossing over, giving you that reassurance, that confirmation. And then you get a support right off the EMAs, right? And this is a capitulating candle. This is a bullish candle, moves up, breaks the highs, consolidates, holds the highs, and then moves up again. So that's your confirmation, right? Now, today was a little trickier. It took off early. I know a lot of people traded that break. This is why I don't trade breakouts. This is exactly why I don't trade breakouts, early morning breakouts. Look at that. Look at that volume. This is so, I know so many people piled in here. They're like, oh my gosh, Tesla's breaking out, got above pre-market highs. Then it just gets slammed. And if you're paying attention to the overall market, it also sold off. So got slammed, comes down, gets under VWAP, right? Wait for the pattern to form. Now your key here, let's take this off. Your key here is remove trend line, bro. Oh, this one. Your key here is you're looking for the downtrend to break to the upside. Okay. And I didn't take this. Listen, I didn't take this. I make mistakes. I should have took this. I was being you know what? Bleep. And this was a falling wedge pattern. I should have entered on the break of the damn wedge, and I didn't. I stayed more patient. That's okay. But I didn't. There's two ways to do it. You could be a wuss, or you could wait for confirmation. It depends where you're positioned at. It depends on your risk, right? If you have small risk, you got to take that. If you have a lot of risk on the table, be more patient. So it really just depends. There is no absolute answer. Depends where your position, how big your position is relative to your portfolio, whatever. So you get the breakout. It starts to hold the moving averages. So this is an entry. Where do you exactly entry? Well, I use the 9 EMA and I use this is the 9 and the 21 EMA. I'm actually going to change this to the 20 EMA. And so I use those two, right? Now, did we get across? You got the breakout and you got a couple. What you want to look at is before the breakout, where was the consolidation? Resistance. It was at 257. Let's call it 257. Can we call it 258? Yeah, let's call it 258. Let's call it 258. 257.50 to 258. That's your consolidation there. Okay, that's where it could not get above. So after it breaks out, you could wait for it to get and hold that that previous level. It gets above it, gets rejected, right? Now you get the cup, now you get the reverse head and shoulders a little bit. You're getting that reverse head and shoulders, and then now it starts to support the level. You can see it right there. It starts to support, pulls in, at least holds the moving averages, capitulates, goes up, and then now you're getting long somewhere around here, or you could wait for that second level, right? So this is where you enter. The problem is it gets rejected by VWAP, comes back, but it holds the same level. So you know that's the real level there. Okay, that was the real level. Now you have a full cup and handle. Okay, you get a full cup and not cup and handle. Now you have reverse head and shoulders. Here's your shoulder, here's your head, here's your shoulder, and you get in on this breakout right here, 259. Now we came back into it, but we'll see if it holds, if we gap up in a pre-market. But that's your cup and handle. So totally different, two totally different trades there. We're just pointing it out, doing some price action so you guys can take a look at that. Let's see. Now, what I was going to do was look at the companies who have and what does SPY look like? The companies who look very terrible, look like trash, just in case we break out and then we roll over, which would probably be in the next couple weeks. We break out and we roll over into that inflation print. So we'll take a look at that. Stay tuned. First, I'm going to put up, let's go back to this. Let's go back to the other chart. Back to this chart, we'll take a look at who's getting crushed the most, who's looking pretty bad. I'm going to say XRT. A lot of these retailers, they're probably going to struggle. A lot of people, they're probably going to short them. They're at risk of rolling over. Before I do that, I'm going to go to the bathroom really quick. I'll be right back. All right, solid setups. What are some solid setups for shorts? What are some solid setups for shorts? I think first I want to take a look at retail ETF. Check out a couple names in here, bro. All right, what do we got? Usually I use Robinhood, but it's on my phone. I don't want to log in on my computer. Sprouts. You guys want to short Sprouts? Apparels. Here we go. Apparel, other special retail, consumer staples, food retail. Who's probably the weakest in this? Who's probably looks the weakest here? I'm going to say automotive retail. Let's go to apparel. Bro, where's the holdings at? Oh, there we go. Well, why doesn't it give me the ticker? Abercrombie and Fitch. I'm looking for the tickers here. All right, never mind. I'm just going to use this. Hopefully nobody can see my screen. All right. Try to do the website, but it didn't give me the tickers, so I know how to do it on Robinhood. Do you guys want to see how to do it on Robinhood? Here, I'll show the screen really quick. Show you what I do. Just if you have Robinhood, I guess if you don't, it doesn't matter. But you just I typed in XRT. That is the retail ETF that we're looking at. You just scroll down and it's going to show you the holdings, the sectors that it holds, but we don't really care. We're looking at these. Oh, now, yeah, we actually have the holdings there. So Casey General Store, and then we'll start plugging these in. So I'm going to leave this on the side. I'm going to plug these in to the chart. We'll get back to the chart. I'm going to plug these in to see if there's any nice setups. You could use, there's another way you could do it, but I want to go through this way because you can see more charts and developing charts also. So Casey, whoa, that thing is up. What the hell? This thing is skyrocketing. Well, that's not a short, maybe. It doesn't have a short setup, but I guess they're doing pretty good. Murphy's, they're probably, well, this is kind of, I mean, these are kind of gas stations, so that's probably why they're moving higher. I remember shorting this thing back in the day. DBI, I thought all oil companies were going lower because I was a maxi Tesla bull, and I just thought oil, nobody needed oil. I didn't understand how it worked. DBI. Let's see, what's probably the worst? What about Sprouts? Sprouts is kind of expensive. I think people will stop shop. Oh my goodness, Sprouts is shooting up. Maybe this rolls over. Let's check that RSI. Is it overbought? Dang, Sprouts doesn't look like it's going to roll over anytime soon. I would have thought it was kind of leaking. I guess not. How about Abercrombie and Fitch? Maybe these are set up for the holiday season spend. Somebody in here is going to get killed though. Somebody's not going to get any demand. Ooh, Revolve. Remember my brother used to invest in that. Well, trade it. American Eagle, Walgreens, Costco. Ooh, Walgreens is getting smashed. Okay, this might be a good setup. This might be a good setup for Walgreens. Okay. All right, so yeah, for Walgreens, it's a little oversold, so you're going to wait for this bounce. So the key here is the market's going to recover. The market will recover. But the question is, if it doesn't continue higher, this is going to be a really good prospect. The momentum is clearly to the downside. So Walgreens at about 28.25, maybe. You missed the short on Goose. Let's see what Goose looks like. Oh, Goose starting to roll over also. Canada Goose Holdings. I remember when I was day trading, I made my biggest trade in one day back in the day when I was day trading on a platform. I shorted Goose. So I just have a short bias on it. This was way back in the day. Anyways, Canada Goose starting to break. I mean, you might still have some room to short it if it bounces. That's like really, you don't want to short on the breakdown. You can short on the breakdown. I'm thinking of swing shorts. If you short the swing, or if you swing a short though, then you really wanted to come back into that support level, which is somewhere right here. Oops. Right, this is your short level right here. So we're looking at 1450. If it can come back into 1450, right, the RSI starts to bounce and it goes into 1450 and then just can't get above it or holds below it, then you reshort it. right? You want to short into strength, not really into weakness. You want to short into strength. Unless you're day trading and you're a scalper, that's different. Even scalpers short into strength though. They watch the tape and then they'll short into strength. All right, XRT is one. Another ETF. Let's go through some of these. I know these utilities are getting smashed. They're kind of overdone. How about XLR? We are XLRE. These, dude, commercial real estate is gonna break. See if there's any commercial real estates, individual companies in here that might break, or who are already breaking. PLD, Prologis. Don't know who this is. Anything? I mean, you probably want to see this bounce back into, back into this previous high. 114. That might not be too bad with option. I bet you the spread is terrible though. I bet you the spread is so bad it's not even worth it. AMT, American Tower. Ooh, just bleeding. Wow. Yeah, a lot of these guys are really bleeding. They should bounce, and then that's when you reshort them. So American Tower, some resistance here. I want to see a bear flag though, something that hasn't broke down yet. Was that 164? Let's go public PSA. PSA, no bear flag. Ooh, that thing is just grinding lower though. It looks like it's gonna break out, honestly. Any type of good news, probably relief rally. A lot of shorts in there. Yeah, that'll break out eventually. TGT. Let's check out TGT. TJT. Wow, Target is bleeding, bro. Target's still bleeding. So I don't really like that. I want to see a retracement back up. I mean, you can chase it lower, but it can have a nasty rip on you, especially if you hold it overnight. So I wouldn't do it. But Target, I think, is still bleeding. That's crazy. This is now back to levels from what? Levels from, I guess, the pandemic. Wow. What about Foot Locker? Did it ever? Oh, here you go. Look at Foot Locker might actually be a good short because it's pulling back in. Look at these gap downs. Oh my gosh. Now these are nasty. Al Target, win Walmart. So what? You're gonna trade pairs? Short Target, long Walmart. That might actually be a good pair. Foot Locker. I just want to see this really quick. So you got this gap to fill. You know, it'd be the perfect short, honestly, is to see Foot Locker fill the gap. Dang, this thing gap down twice. To see Foot Locker fill this gap and then reverse lower. That's usually the best way to short it. And then at the same time, it's going to break this trend. Right, so you get it, fill the gap, break down. I mean, you could short it out the trend, and then short it out the gap, and then short it again when it breaks the downtrend. If it keeps going lower, I don't know. Headed into, it might have what, maybe December, maybe it goes up, and then you go head into December, and it's like, all right, nobody's gonna buy no more Foot Locker, right? That's enough. No more presents for the kids. What is the worst brand that kids? What is the worst brand? That's what you want to go after. That nobody wants, and is the price moving up? Let's see what Walmart looks like. I don't know if you want to short Walmart. Never a good idea to short Walmart. Everybody goes to Walmart. People go to Walmart to buy everything, man. If things are too expensive, if they need, pretty soon Walmart's going to be selling cars. They're going to be selling cars. They're going to be selling cars. They sell everything. What happened to Rivian? Rivian, did it break down or what? Ooh, see, this is exactly why. This is exactly why I don't mess with stuff like this. It looks good. It looks like it's gonna break out. RIP football legends if you're still holding this. But this is exactly what I mean by you can't trust these companies. They look solid. They look like they're gonna hold up, and then they just break down out of nowhere. They're too small. They're just too small, and you never know what moves the stock. It could be forward-looking guidance. I don't know, but let me check on this chart, see what it looks like. Dang, the thing got smashed today. Let's see, Rivian. Sales outlook, capital rate. Oh, they're about to sell stock. There it is. They're going to sell stock to raise capital. They're screwed. Look at all the auto. This is why I'm bullish on Tesla. All the other automakers, they're not going to survive, bro. Toyota might be the only one. And when I say survive, I'm not saying they're just going to die tomorrow. I'm saying like slowly but surely they're going to fall apart. So yeah, that's what happened. Their guidance, they downgraded guidance, or guidance, their outlook is lower, obviously. I mean, people don't want to buy Rivians, they're too expensive. Teslas are way cheaper and better performing. They have the range, they charge faster. So Rivian, this is exactly why, football legends, if you're here, why I don't really like looking at these things. They're trades, but like at any moment they can crush you. I've learned my lesson enough. I don't mess with that. I mess with crypto, but I'm holding him. Yeah, it started to look good and then it just got destroyed. All right, Crocs. Oh, you guys can't even see it. I was on a different one. So Crocs. Hey, Crocs might break down here. What's the latest on Crocs? I just bought some Crocs like a couple months ago. I was thinking about buying some more. I like Crocs. I got flat feet, so they feel pretty good on my feet. They're wide. Crocs looks like it could really, I mean, I don't know what the fundamentals are here. I do not know the fundamentals of Crocs. But it looks like it's going to break. So what you could do on Crocs is the clear support is at 83.50. It's what I would say. So what you could do here is the way I would look at it is first get your level at 83.50. Let's dive in, or let's zoom in, and you want to see some bearish movement against that. Let's say the perfect scenario really to short is if you get a gap down beneath 83.50. Okay, you get a gap down beneath 83.50, sort of like, let's see, I'm going to try to find one. That's a gap up. Let's just go with this right here. Okay, see how this gap's down? You get a gap down below 83.50. It comes back up and it gets rejected by the previous day close. And it just sells off all day. And then it tries to retest, it gets rejected again. See how it filled the gap here? And then just sold off. Fills the gap, sold off. Fills the gap again, gets a butt, sold off. Tries to get up, sells off. It's a weak stock. This thing is weak. So if it gaps below 83.50, you want to see it retest 83.50-ish, somewhere around there. And maybe even 84, because there's still some support at 84. You want to see a retest and a sell-off. Good point. Good call there. Yep. Only the strong are going to survive in this market. Only the strong will survive. The rest of you guys, the rest of these clowns they're going to get murked, unfortunately. That's what the setup looks like for me anyway. 1, 2, look at that triple top. Tesla's going lower. 256 support right now. 256 is support for Tesla. Got to hold 256. And then I'm going to go to that Tesla. What was that Gary Black talking about? Oh, he talked about Rivian here. He said Rivian selling today seems way overdone, minus 23%. Plans to sell 1.5 billion convertible debt due by 2030. Current equity at 17.5 billion. So even if 100% of new debt debt issue is converted, assuming to normal conversation price 30%, blah 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 blah, whatever. 7% dilution. Everyone's expecting more. Boy, this dude, I don't know all this stuff. I don't know what this means. This dude is too deep, man. Just tell me the runaround. No, I'm just kidding. They also pre-announced 3Q revenues in line with expectations. So their guidance wasn't that bad. I think it's just literally they're gonna sell stock, so they're gonna dilute the shares. So okay, so it probably will bounce. Looks like they're gonna dilute the shares. You've been destroying SoFi. Okay, looks like they're gonna dilute the shares in order to, they're running out of money. They're screwed. They are screwed. Anyways, I'm gonna go back to and then I'll take a look at SoFi here. What is SoFi looking like? Somebody said SoFi. SoFi in a downtrend. I mean, I wouldn't mess with it. It can't hold above $8.50. I'm not interested in SoFi till $8.50. This thing could go all the way back down to $5. I'm sorry, but it could. It doesn't have the fundamentals. It's not profitable. And I know a lot of people love it. They don't want to hear it. They're like, "Oh, F you, bro. You don't know the theory." And bro, CCIP is way more powerful than what SoFi is doing. SoFi has a lot of people to actually compete with. I'm not bearish on it, but rates are too high. The environment is tough. Qs looks like Qs are bouncing in after hours. Anyways, Gary Black here. Let's go back to Tesla because this is going to be the best perform. This will be the biggest stock in the market in 5 years. Anyways, look at that big wedge. It's a beautiful wedge pattern here, running into that resistance. There's a lot of resistance there. So what he said is, I talked to my Tesla sales contact here in Chicago this morning. He told me the new Model Y rear wheel drive orders are huge. So they made the Model Y a lot cheaper. It's not as fast. It doesn't go 0 to 60 as fast. It takes 6.6 seconds. So this is the slowest Tesla car. But people don't care. People don't care about a fast Model Y. They're seeing that gas prices are too high, that vehicle prices in general, gasoline price, new cars and used vehicles are too high, and they're climbing, while the Tesla car models are falling. I'd be interested to see what the price is. It's probably going to be below 30K pretty soon here. So a lot of demand coming in. The big question is about range. Does it have enough range? How long does it take to charge? What is the cost of charging it? And what is the maintenance costs? That's what people are concerned with. And it looks like this guy answered, said 260 miles of range, 85% of blah, blah, blah. So it has about 260 miles of range. Supercharger network. Somebody else actually joined the supercharger network today, I think. What else is Gary Black talking about Tesla here? He says, what the heck? Bro, what? Gary Black's over here talking about red pill content. I can't believe the pushback I'm getting from all the men who think it's okay to wait for women to approach them. What's wrong with you guys? Women want guys who take charge. If you don't, you look weak, and most women aren't interested in weak men, bro. I got 100% agree with him. I've never seen him talk about stuff like that, but that is true. Waiting to approach you. What the hell? What are you, 6'4"? 6'4", good looking guy. I doubt it. It's like 1%. So you're not going to get approached. You're an idiot if you think that's the truth. I actually have a funny story. I don't know if I should tell it. My friend tried to say he got approached by a girl when the girl's friend approached him and asked him. I was like, bro, that's not an approach. For one, for two, the girl's handicapped. So I'm like, bro, get out of here, man. Stupid. Anyways, back to the market, bro. Gary Black, though. Okay, I see you, bro. Helping out the young men. Tesla's approach to advertising: put the facts on the website and hope the consumer sees them. A guy walks in a bar, sees in it. Bro, what is he talking about here? Oh, advertising. Okay, Gary Black is funny, bro. This guy talking about handicap is outrageous. I mean, they weren't like fully handicapped. I'm exaggerating because it's funny. They just, I think the girl, like, she was in a wheelchair, or no, she had crutches or something like that. And he's like, bro, she couldn't approach me. She would have approached me without crutches. I'm like, bro, she walked in the club. She's literally dancing. So she walked in with crutches, but she can't approach you because she has crutches. It makes no sense. She walked in with crutches, bro. Come on. Anyways, that was just a funny story. I like to rip on that guy. We're guys, we rip on each other. Goldman Sachs broke below trend, maybe just getting started. Oh, you know what? Banks are in trouble. Let's go to Goldman Sachs. Okay, and it's starting to come up. Remember, we do have bank earnings coming up though, so I don't know how bad the banks are going to look. Goldman Sachs is one of the strong banks. It's not a regional, so I don't know if this is a short. It could be a short. Let's see where this aligns. June. It could be a short, but I don't know. It's an investment bank. They probably have a bunch of products that they're using from money market funds. And I'm just thinking of the fundamentals because I always want to align the fundamentals with the technicals. If it was a regional bank, then I would say, hey, you might be able to short this and just go take a nap for a week and not even worry about it because something's going to break. But Goldman Sachs, I'm not sure. Yes, price did break. Maybe it retraces. Maybe you short it here at this gap at 318. But it's not a system. It's a systemically important bank. It's not a trash bank. So it's an investment bank. Maybe I'm wrong, but I wouldn't be looking that deep into it. This next segment, Tesla prices now compete with the average new car. Starting prices fall below the U.S. benchmark transaction price. This is interesting. Take a look at this. So it looks like Model Y is now below the average U.S. selling price or benchmark transaction price. Model 3's been below it. Well, what's the damn price? Everybody wants to know, well, what is the average price? I think it's 45,000. I think the average let's ask ChatGPT. Where is it? Oh, I didn't add it on here. Exceptionally high demand. Okay. What is the average? You got to be specific. What is the average U.S. New car price? Probably a stupid way. Ask it, but we'll see. All the Civic Type R fans are going to get Teslas. 48,000. Damn. Average cost was reported 48. Golly, bro. People are getting scammed. So yeah, this dude, Tesla is going to eat up the competition. Damn, dude, that's bad. 48,000 for the average new car. Okay. That's what I love about ChatGPT. You don't have to ask the same question. What about used cars? See, used cars got to be lower. I'm sorry, SoFi guy. Go check out Chainlink. Let's see. Used cars. Just give me the number, chat. Bro, what's the price? Okay, the average loan of 26,000. Okay, so the Tesla, I wonder what a used Tesla is. We're approaching that really low price though. So the used car, dang, dude, that's insane. That's insane. Wow. Anyways, back to the charts. So yeah, Tesla's gonna break out, man, just because of that report. I'm just kidding. There's just a lot of catalysts stacked for Tesla. Back to 260 and after hours. Let me see. We're back at 260. We might get a gap up. The market is just so oversold. I think we're gonna get a gap up here. The Civic Type R is amazing. Car people say it's like a rear wheel drive or all-wheel drive. The way it handles and how Honda made that car really well. The Civic Type, okay. I'm not a big car guy, so I don't really know much. Need to test drive it one day. Shout out to Honda. What is that, Japanese automaker? Hyundai? Is it Japanese? Or Korean or something? Some type of Asian. Only the Asians can compete. But they're charging 20K over MSRP. You talking about for the for the Honda, for that Honda car? Bitcoin's still here. What about crypto land? What's going on in crypto land? Oh, okay, they're charging 20K over MSRP. Yeah, the car industry is screwed. We're getting closer to closer and closer to them being completely screwed, pretty much. Look at that wave. Looks like a big bear flag, but yeah, I think they're from Japan. But MSRP is crazy for the cars. That's why Tesla will take over everything because people know EVs are taking over gas, especially over in California. California is, California is adapting. Not everybody's a big fan of California, but usually they adapt pretty quickly to new technologies. I mean, they do have a lot of revenue. People bag on California, but still probably has the best weather. Probably the most beautiful place, like as a state in the US overall. Taxes suck and the politics suck. But hey, it is what it is. Can't have it all, right? It's too expensive. I had to work at 15 to survive. Yeah, California is too expensive. I mean, that's the cool thing about EVs though. If you get Tesla transition energy, imagine the cost of living comes down in California because of the EV I mean, it's probably not going to happen for a couple of years, but that'd be the bet. Where's my damn crypto news at? Oh, here it is. Descript. Zero knowledge proofs, tokenization. There's nothing too special with crypto right now. NOIA crypto synotropy has a lot of strength. I don't know what that is. NOIA. NOIA. Never even heard of this. Is it against USD? Man, you guys be coming up with some stuff I've never heard of. I don't know what that is. Well, we need the dollar to roll over. Look at the dollar hasn't had a red week since July. We're due for a pullback in the dollar. No, okay, here we go. Oh, no USDT. I don't think this is it. I don't even know what this is. I don't think this is what you're pointing at because obviously it's spelled wrong. Yeah, I don't know. Doesn't pop up on mine. Maybe this, I don't know. This looks pretty good. Is this what you're talking about? Neon? Synotropy? The thing's getting crashed. No, I'm just kidding. Not to say this is it. But yeah, I don't know. I don't know what this is, Doifer. Synotropy. If I haven't heard of it, it might be I don't want to say it's a scam, but could be a scam if my brother hasn't heard of it. He's usually on top of everything. I'm not saying that is because we don't even know what that is, but who knows? All right, what else we got up here? Well, the crypto fear and greed index is at extreme fear. This is usually a buying opportunity. So, oh, there's that. There it is. Was it Bloomberg says something good? What is Bloomberg saying? So Bloomberg says after a decade of being trounced by Tesla, this was supposed to be the year that traditional automakers finally put up a fight for electric cars. General Motors was committing its big brands to new line of electric models. Ford and Volkswagen were ramping up production of EVs designed for the masses. It was many predicted time for the automaker world. Blah 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 blah. Where's the good stuff at? Ford's F-150 Lightning has been outsold by the R1T from Rivian. Okay. I actually saw a Rivian the other day. It was kind of cool. I'm not going to lie. I'm like a Tesla fan and I'm like staring at the Rivian, but I'm like, it's like you're married and you're looking at a different woman. I'm like, checking him out. You know what I'm saying? I'm like, that looks like a pretty good vehicle there. But I was like, and then some dude walks up. Is that a Rivian? And I just turned my head. I was like, I better get going here. That's not a Cybertruck. Anyway, so it looks like the Rivians are pretty solid. They look pretty good. Just 2 years ago, GM's lineup of new EVs has suffered crippling setbacks. Dude, they're screwed. In battery manufacturing, in July, Volkswagen's chief executive Thomas Schaefer, don't care. His own company's EV, the roof is on fire. What are you talking about? Bro, what are you talking about here? Where's the EV competition? Tesla still rules the U.S. market. Oh, you guys can't even see this. Let me switch it over. We're just reading it until we get a chart. There we go. Tesla still rules the U.S. market for fully electric cars. 61% of EVs ever sold in the U.S. Okay. Model S, Model 3. I mean, that was it. That was the thing. From Blue, well, I think what he's saying is that finally Bloomberg is showing something good. Lucid cars look pretty good also. Those ones are, they probably look better than Teslas. They're just not as they just don't perform as good. They just don't perform as good. What do we got breaking news here? Oh, Fed discount window loans, blah blah blah, ending in October. Fed bank term funding program, 107 billion after 107, blah blah blah, October. Yeah, I expect that something's gonna break. I think in the next couple weeks. I think we get something break. I think the Fed's gonna pause. Yep, we're getting closer, man. We are getting closer to something breaking. We're getting closer to something breaking, and we're getting closer to the Santa Claus rally. I think so. I think the probability is pretty high. See, what did you got here? Nashville Farm. Wait, are you a bot? This sounds like a bot. The ability to audit smart contracts and analyze on-chain TRXs will be huge. Chain analysis. They're offering certification if you know what to look for. Banks don't, but they should they want to play, but they want to play. Okay. Batteries are gonna kill EVs. Lucid is the luxury Jaguar of EVs. Okay. Is anyone here? Are you a bot? The only reason I asked is because of what you put, bro. Are you about chain analysis? Maybe you're not a bot. Anyways, what's your point? You think Lucid Air is gonna beat Tesla? I don't think so. When the Fed pause, what does that do to the markets? Well, I mean, when the Fed, it really depends. There's a couple things to keep in mind here, and we'll look through the history. Let's look through the history. This is where I lose people because they're like, I don't care. I just want to know what to buy. But if you look at the history of the market, okay, we're on TradingView. Let's go to SPX. I guess that was a bot. They never responded. Oh, never mind. Lucid has a car. Oh, okay. Yeah, we know Lucid has a car. They have a beautiful car. I agree with you. They're probably the Jaguar. So you're saying basically they survived. They're just more luxury brand. Maybe so. But if Jaguar does it eliminate Jaguar? I don't know. So when the Fed does pause, so let's throw on Fed funds rate. Let's throw on let's throw the Fed funds rate on here. We talked about this before. Typically when the Fed pauses, let's look at that last cycle when the Fed did pause. The market rallied. Okay, here's your pause. Here's the Fed increasing rates. Okay, they announced the pause right here. Here's your pause. Okay, the market rallied, but the market was down a lot too. It was down. So I always say the pause is not bearish unless markets are at all-time highs and economic activity, the business cycle is turning lower. In this case, the market was not at all-time highs. It was actually selling off pretty steep. It was down, what, 60%? No, like 25%. What was this? I remember this. I was pissed. I was holding Facebook. I was getting smashed. Down 20%. The market was down 20%. The Fed paused and the market rallied 40%. Okay. And now you asked what happens when they cut. Oh, no. You said pause. The pause is bullish. Yeah, the pause is bullish. The thing is, they either announce the pause or it's just paused. So right now they're on pause. Remember, they paused earlier in the year and then they hiked again. So that's what they're saying. We're going to hike again. So they don't want to what is the word? They don't want to signal to the market if we pause, that's it. They're telling the market if we pause, we can still hike. So once Powell does say if we pause, or once he does announce, okay, we're pausing from here and that's it. If he ever confirms a pause, the market's going to rip. Why? because economic activity is actually turning to the upside, right? Economic activity is turning up. Let's see if I can get that on here. Here you go, ISM manufacturing. Okay, so in this case, economic activity was falling, but the market was at lows. So the pause was bullish for the market, and the cuts also took the market to all-time highs. That's too many things. Okay, so when the Fed started cutting, the market went up. Anyways, we're talking about the pause. Okay, let's go to that last pause. How about here? Oh yeah, check this out, right? This was what, 2016? 2016. The Fed paused right here. Okay. You looking at that? The Fed pauses, the market rips higher. Okay. But they were hiking. So this is a little different. They were hiking and then the Fed paused. Where was economic activity? It started to bounce. Okay. Nice. Economic activity was going up. So the pause is bullish. A pause is not bad. The pause is always bullish. The question is the market already overweight? Are people positioned overweight during the pause? Right now, they're not. They're underweight. Oh, as a matter of fact, there's a guy on my TikTok. This dude on my TikTok. He's cool. Shout out to Hugo. He's always bearish. He's like, I'm so bearish. And look at all these dudes who are so bearish during the year. Remember, they reversed. I told them, I was like, the market's going higher. And they were like, no, it's going to go to all-time lows. Now they're just saying, oh, it's going to pull back to 420. Now we're there. And they're buying. So anyways, they're so bearish on the market. And now it's funny because now Hugo is saying, I bought the dip, right? He's saying we're going lower. He said he bought the dip till January. I'm like, bro, am I really influencing you to buy the dip? Or did you just change your narrative? If I convinced you, I've done my job. And my job is not to get you to buy the dip. My job is to get you to use common sense, right? That's my job. So he bought the dip and then he's waiting for all-time lows in January. I'm like, bro, you guys are crazy. You guys just go back and forth. We got a good Nashville fam. Are you a female? I can't tell, bro. You never know with TikTok. It's just interesting. Usually females don't know what the hell. Okay, cool. Well, that's cool. We got some feedback from a female. There's not many on here. Usually you guys are like 1%. They stopped treasury buybacks. Who? You talking about the Fed stop treasury buybacks? Well, we can get into this. First of all, what's your positioning, Nashville fam? What is your outlook? Are we going higher or lower from here? Is the market going to collapse? The pause? Oh, okay, the pause. Well, we're not talking about liquidity. We're talking about the pause of rates. So when the Fed does pause, when they stop buying treasuries, that's typically the opposite. It's actually not very bullish when they stop buying treasuries. It could be though, because it depends where rates are at. You think the market goes higher. Okay, so you're bullish. Yeah. Yeah, if the Fed does pause in November, the market's going to take off, bro. It's been trying to get that. It's trying to price in the pause. It's been trying to do it. Then it has to reprice, which we're doing today, because the Fed in the last meeting basically said, okay, yes, we might pause here, but our forward expectations are to hike. So they're saying we're not hike, I'm sorry, is to hold rate. So because they were projecting into 2024 that there would be some rate. First of all, at the beginning of the year, the market was the Fed was supposed to cut rates at the end of this year. So they were supposed to cut rates in November, December. That got taken off the table. Then they were supposed to hike in mid 2024. That got taken off the table. And then it was like, okay, they might hike in November. Now they're taking that off the table. So even though they're still going to pause here, they're probably not going to go much higher. The changes in the Fed fund futures, those futures are pushing out further. Can you trust it? Not really. Who cares what they say? The market's going to react, but it's not the truth. That doesn't mean they're not going to cut at all. So Nashville fam says commercial property will drive it, right? Commercially property will probably drive those cuts or the pause for sure. We've, commercial real estate, is at risk of collapsing. It's either regionals or commercial real estate. That's where I'm at right now. It's either regional banks collapse or commercial real estate collapses, which are kind of tied together because, commercial real estate is the biggest part of the balance sheet on these banks anyway. They still aren't buying treasury bonds, which is why rates were low to begin with. They still aren't buying treasury bonds, which is why rates were low to begin with. Well, the Fed stopped buying treasuries in March of 2022, right? They stopped buying treasuries in March of 2022, but it's kind of tricky because they're still buying short treasuries. They're still buying shorts. Keep that in mind. It's called shadow QE. The reverse repo, there's a facility at the Fed. Oh, you're talking about 10 years? 10 year? Yeah. They're not buying 10 years. They stopped selling 30 years, by the way. The Fed stopped selling 30 year. I can throw that chart up if you don't believe me. They stopped selling 30 years. They are selling mortgage-backed securities. They are selling 10 years. But they stopped selling the 30 year. So the long end, they are not selling. That's why I think this long end tightening by the treasury market is going to capitulate, because it's going to capitulate because the Fed isn't even selling those. So that's not really, you don't have the double dip. You don't have the Fed helping you out there by selling and then you're shorting. 10 year, yes, but not 30 year. And then short term, reverse repo is buying those up. The Fed was buying their own bonds. Yeah. I mean, yeah, Nashville fam, 10-year bonds. The whole, this is all driven by rates, Slime Z. So everything comes down to where these rates go. In my view, I think specifically that consumers are going to keep spending. This is the backdrop. Consumers keep spending, right? They keep spending because, we're Americans, and what Americans do, they show off, they spend money they don't have into the holiday seasons, and they're like, oh, I'll pay it back later, just like the Fed, right? We're being trained by our daddy Fed or daddy America. Push your debt further into the future. The difference is businesses, they take out debt, they spend, but they make it productive to make more money. Most people, they don't. They just consume. So there's going to be more spending. I don't see consumers falling off a cliff the way most people say. They're going to keep spending. All right. Okay. The Fed, what's going to be interesting is if the Fed stops selling U.S. bonds. They have so many tools to keep the economy from collapsing. They could pause the liquidity drain from treasuries. They could always do that. You could even have the U.S. Treasury come in and start buying back their own treasuries, their own bonds, to ease financial conditions. You already have the reverse repo coming in, buying bonds, but they're buying short rates. They're not really buying the 10-year. They're not buying the long rates. They're buying the 10-year. But there's so many tools that they have. So I just think this is going to be, even if employment doesn't spike and the economy is okay, people are going to say, this is not a soft landing. I think we're closer to a soft landing than not, because the Fed tools come in. Most people that push, there's no way there's going to be a soft landing, it's a hard landing. Most people that push that, they're short. They're short on the market. They're very long weighted in treasuries. So they want that trade to work out. Just it's human nature. Most people, they're biased in what's going to help them out. I'm biased too. You already know what my bias is, though. Crypto's going higher. Tesla's going higher, right? But I also shorted Tesla when I was like, okay, this isn't looking too good, blah, blah, blah. And then what'd you say? You said we have been trained to consume but not produce. Yeah, 100%. We've been trained to consume, not produce. That's why schools are trash. Not all of them, but I was a teacher, so I can say that. And they don't really teach kids to think for themselves. They teach kids how to follow directions. But whose directions? There's no dream for kids. There's no American dream. It's go buy how. They don't teach kids how to save and buy technology. That's trash. They teach them how to take out credit cards. They don't even teach them taxes. It's messed up. Not if they burn them. When the Dow drops, Bitcoin goes up as a store of value. When the Dow drops, how to be workers. Yeah. How to work for the man. 100%. How to be workers for them, right? And it's not to say it's bad to be a worker. You got to make a living, but to not open up people's mind or to to constrain the knowledge and the inspiration to get people to go build their own companies, that's where it's not, legit. Like, let's solve these issues. It's always government spending, not in the hands of, it's always government spending to solve issues, which never really solves them. They don't teach you how to invest either. Yeah, they don't teach you how to invest at all, because the whole financial system is a scam. Everybody says the dollar is going to drop because the Fed prints money. Dude, excuse my language. I can't say that on here. The whole world prints. What are you talking about? The whole world is printing money. Every central bank prints money. So who's printing the fastest? That currency is going to drop the fastest. And we're not printing the fastest. We just print the most. The Dow drops and Bitcoin goes up. Look, I'm pro Bitcoin, I'm pro crypto, but that's not how it works. The Dow doesn't drop and then Bitcoin goes up. First of all, let's not use the Dow. Nobody cares about the Dow anymore. Let's use the S&P 500, because that's the real benchmark for the stock market. We could even use NASDAQ going forward. Most, biggest companies are in NASDAQ. Anyways, S&P 500, right? Let's take a look at that. If that drops, that doesn't make Bitcoin go higher. What makes Bitcoin go higher is the Fed increasing liquidity into the market, which is rates getting cut, or a Bitcoin ETF passes, which literally pumps. It's more liquidity. So liquidity drives. If the Dow drops a lot, there's something going on in the market. Bitcoin's not going to go up. Bitcoin's more likely to fall. Maybe not as much, depending on what the risk actually is, right? So Bitcoin is based off liquidity, not necessarily a store of value for most people. It's a trade for most people. It's a store of value for the people that are smart, but most people are not smart. They're not smart enough to think it's a store of value. They think it's too volatile. So the crowd doesn't believe Bitcoin's a store of value yet. They don't. But, smart people understand it can't be debased, XYZ. SPY to 500. Maybe not this year. Let me see. It could go this year. That'll be tough. We have 3 months to go to 500. The only way we go to 500 at this point is if, maybe early next year, here's the scenario. Oil backs off a lot. It stays below 83.50. It's under there now. Oil backs off. Rates back off. The Fed pauses. Economic growth slows in the services sector, so rates don't go up. Prices fall, so rates don't go up, and manufacturing continues to pick up, so there's still economic growth, which is called the rolling expansion. Okay, you're expanding in the manufacturing sector, but you're slowing in the services sector. Keeps things even, right? No crazy spending. That's where the stock market wants to see that. It can move. The dollar eases, gives you another boost, another tailwind for the market to go higher. Number two, earnings start to pick up because of fiscal policy. $1.5 trillion infrastructure, 1 point something trillion infrastructure, mostly goes into industrials and energy. Inflation Reduction Act, another 500 billion, something like that. CHIPS Act, another 500 billion. Semiconductors, chips, those companies, NVIDIA, Google, they pick up the index. Damn. And then you have AI coming back into play, right? That picks up the index. People want to invest in a narrative more than anything. They don't want to miss out. So you get inflation come back down. Look at PCs at 3.9%. Okay. Core PC is falling. So once you get core fall, because oil is down, there could be a gigantic rally in CPI, because really, look at CPI fell and it bounced. So the market's like, okay, are you going to roll over? Typically when it rolls over, that's it. It's done. It's making a new low. Once you roll over, then the market's going to bid in high. Okay, inflation is done. It finally rolled over and the Fed has paused. The next thing is, where's the recession? But if the Fed communicates, hey, we're going to cut rates, or the U.S. Treasury is going to step in, or we're going to do yield curve control, the market goes to all-time highs. So there's a scenario for all-time highs. There's a scenario for new lows. There's a scenario for everything. You just want to know what the scenarios are. All right, looks like we got some pushback finally. This is more exciting. Crypto is a P2P market. It doesn't work for clearing houses or banks. No, Nashville Farm, you're 100%. You don't even know what you're talking about at this point. Nashville Farm, Nashville fam. I'm sorry. I'm gonna have to dab you. I'm gonna have to piece you up here. Are you familiar with the DTCC, the Department of basically the U.S. clearing They clear equities, treasuries, all U.S. securities. Are you familiar with the DTCC, the clearinghouse? Right. What is the DTCC? Let me school this person right here. They said that crypto is blah blah. First of all, crypto is a bunch of things. ACH. Crypto is a bunch. So DCC is the department. I'm sorry, the depository trust and clearing corporation. That's too many words. I just call it the settlement. They basically settle all the transactions for the United States securities law, United States securities. Okay, that's what they do. Well, most crypto is trash. I'm going to tell you that right now. But you're saying that it's just peer to peer. Bitcoin, sure, but look, here's the thing: BlackRock is buying Bitcoin. That's already priced in, not in the actual price, but everybody knows that's coming. So it's going higher. Bitcoin, at least, right? Ethereum. They've been working on Ethereum for a while. Okay, number 3, the reason I bring up the DTCC and the SWIFT network, which you're literally talking about, ACH transfers, those all go through the SWIFT network, which is the messaging system for the for most of the central banks, right? Well, Chainlink, if you're not familiar with Chainlink, holds all the shares. Yeah, the DTCC actually holds all the shares of who holds all the shares of what? If you know about Chainlink has a protocol that allows all these institutions to tokenize their assets and then move them across chain. So the DTCC, SWIFT, Citibank, central bank digital currencies in general, they are trying to tokenize their system on a blockchain, a private blockchain, not choosing a crypto, a private blockchain, their own blockchains, and then interoperate with each other. In order to do that, you need a crypto. So I'd say there's one crypto that you probably don't understand, which is Chainlink. Okay, because it allows that to happen. Also, you said chips are a joke. Okay, well, tell that to NVIDIA, AMD, Intel. Chips are not chips are the future. It's another one of the secular trends. Chips manufacturing. I bet you're thinking about Nashville fam. My guess is that you're very political biased. I could be wrong here, but when I say chips, all of a sudden you get offended, like, oh, the CHIPS Act isn't going to work. It doesn't matter what you think. There's money literally going into the chips industry. It doesn't matter what your politics are, right? Who cares what you think? Literally, money and stimulus is going towards chips, like a check, just like it is with the Inflation Reduction Act towards electric vehicles, right? So I don't know. Some things are just common sense. It's like, bro, what are you talking about, bro? I'm just kidding. I told you I was going to tear you up, but yeah, most cryptos are trash. What else did you have to say? It's a digital clearinghouse. Institutional investment was always accounted for. Institutional Chainlink is a vector data workhorse. I love them, but they can't because of SEC. Well, bruh, Nashville fam, literally the World Economic Forum are using Chainlink, or using CCIP. They already put it into progress. Swift is already using it. So just use the common sense there. I'm coming at you hard here. Not even that hard, really. But anyways, yeah. And the SEC is going to back off. They already look at with Ripple. I'm not an XRP fan, but they are. I believe the judges basically denied the case against Ripple or XRP from the SEC, and then they told the SEC you cannot file a blah blah blah. I don't know all the lingo, but they removed that. So crypto's going to win here. Not all of them, but commodities and the SEC is not going to win here. And I'm trying to tell you, the U.S. government is literally the World Economic Forum, the SWIFT network. They're using Chainlink. You think that's not going to get passed? What are you smoking here? Go do your research. Go look up the World Economic Forum's white papers on interoperability. Don't take anything personal. It's just how I talk. I get intense about the things that I'm very intense about, right? Anyways, interoperability, and Citibank's new on interoperability, bridges, Oracle, networks, all that stuff. And Chainlink's not a blockchain. That's the thing. It's a technology for blockchains. It's not a blockchain itself. So for the rest of crypto, yeah, they're mostly peer-to-peer. Most people don't even know what crypto is, honestly. They just think it's all currencies. They think crypto is literally about currency. It's not. They're digital assets that create decentralized finance and value-to-value transfers, public, and now they can go private to public with the CCIP. They're trying to get rid of crap coins. Yeah, Divergence ETH, 100%. They need to get rid of them because they are scamming people. Oh, Shiba coin, Pepe coin, those are all scams. They're going to make money. Hey, I'm all for free market, but there's some really, really scammy stuff in there. So, hey, do what you got to do. Coinbase delisting 80 coins, finally. Vector data is used. Vector data is used for markets, not technology, but they do have a great tech. I listed to Chainlink podcast. Oh, you listen to the Chainlink podcast. Cool. Multiple chains, layer chains. Yes. I mean, every bank will have a chain. This is the whole thing. Every bank will have a chain and they'll have their own private chains and they're going to create stable coins. I'm going to go through yours. They're going to create stable coins because that's like the digital dollar or cash in general. They're going to create stable coins, but they need a connector. They need something to connect their private chains to other private chains. And they need something to connect the private chains to the public crypto space. That's efficient, that's fast. That is CCIP that comes from Chainlink. Also, Chainlink has proof of reserves, which literally proves that you have the assets to back your liabilities in real time versus a stupid auditor like the SEC, where they take 2 months to audit you and the next thing you know, you get FTX collapse. That's why I'm bullish on Chainlink. All right, would you say, Doifer, when you use to buy stock, you would get the actual paperwork, stock certificates, the DTCC custodian, all their certificates now, unless you're special ordered them to your house. Okay. That's what you meant. Well, everything's digitized though, right? I mean, I guess I hear what you're saying, but like everything's going digital. So that's why crypto is so important. When I say crypto, I mean verifiable custody, digital custody, because nobody wants to use paperwork, but also the institutions, the central institution could also scam you because they control it. But if it's a public private blockchain, if it's on record, then it's still paperwork. It's on the blockchain. It's on chain, right? You can locate it. You can see that. Oh, damn, damn autocorrect, bro. I hate that too. I do that all the time when I'm texting. Custody is currently also. Yeah, this is why blockchains need. Look at the World Economic Forum, Citibank, Swift, all the biggest institutions are moving to blockchains. It's inevitable. It's happening. It's just a matter of time how quick they do it, when they do it. It's happening. There's no more argument against blockchain. It's here. It's here to stay. The question is who benefits the most. On an immutable ledger system, not digital on immutable ledger system. Blockchain, I mean, Bitcoin's the only true, fully immutable, decentralized ledger system. It's just Bitcoin does one thing. It doesn't do a whole lot of other stuff. So Bitcoin's like gold, like you can store value, right? You can store value in it and nobody can debase it. And it's insurance, it's pristine collateral, but it doesn't create financial services. It doesn't help to accelerate the transition into financial services or bringing blockchain into financial services. It doesn't do that. Yeah, you have the Lightning Network, but the financial system and the banking system, world trade is way more complex, has way more certain features and functions that Bitcoin does not provide. And it's good. You don't want Bitcoin to provide that. You want Bitcoin to focus on pure security, not fast, quick, all these different. You always sacrifice one for the other. You make a trade-off. Anyways, all right. I think that's all we got. Look, we've been on here for 2 hours. Long chat. Appreciate it. It was cool to talk. We'll see what those employment numbers look like tomorrow. I think tomorrow's the Santa Claus rally. Watch I'm wrong and employment comes out hot and everything tanks, yields go up. I think there's just more a chance that it comes in weak. If I'm wrong, then scratch what I said. Either way, I still think tomorrow could be the first leg of the Santa Claus rally. Market is very oversold. Psychology is going to flip if there's just a slight bit that that gets yields lower. So we'll see. Anyways, appreciate you guys as always. Stay blessed. I'll read this last chat here. Actually, the corporations don't like immutability. That will be the conflict going forward. Corporations make permission chains so they can change the code when it benefits them. And I'll have Isaiah explain this later. This is why CCIP is so important, because the middle chain cannot be an oracle, it's a decentralized oracle. So the middle chain cannot be manipulated. You cannot manipulate the middle chain. So let's say, yeah, you're right, they can control their own chain, but if there's some type of information being transmuted between them, they can't go back and change it. So the injected chain is immutable, unless there's some type of code or message. The injected chain is immutable, so they can't screw each other over either. That's how it kind of works. I don't know. I'll have Isaiah explain that, but that's a really good point that you make there. Corporations make, I don't know if Isaiah's listening, permission chains so they can change the code when it benefits them. They're not going to do it in a way that hurts the financial system, right? Everybody thinks like the big banks, they're in trouble too. They're indebted, right? They're indebted. They're at risk of the full economic collapse. So they need better technology. They will, oh, there he is. They will use it as the underlying transport mechanism. Okay. Got to work, gain some capital. Get that capital. Let me see. Not digital and immutable ledger system. The hackable nature makes it vulnerable. Not everyone shoots themselves in the foot. Hey, thanks for the feedback though, Nashville fam. Appreciate it. Hopefully we see you later. Jump on. Hey, if you can, jump on the YouTube. Well, I don't even know you, so you're probably like, what the hell are you talking about? If you don't mind, go subscribe to my YouTube. Link in the bio. Link in the description. Also have a newsletter. It's free. Maybe you care, maybe you don't. That's what I have. Website with a bunch of information. You can go write if you want it to yourself. Anyways, appreciate the feedback. It's always nice to have somebody get some feedback there. They will use their own chains, but they will use their own chains. What else did he say? But they all want to use the standard protocol. Yeah, it's like TCP. They always want to use a standard protocol. So maybe I'm confused about that. Either way, we'll figure this out. We'll keep learning here. We'll do another Chainlink podcast. Anyways, stay blessed, guys. I'll catch you guys later. Get your workout on. Eat healthy. Keep a growth mindset. Learn something new today. And yeah, get better every day. Try to improve as much as you can. We'll catch you tomorrow. That employment report. I'll have some stuff on Twitter first, and then we'll jump on and we'll review the week. Stay blessed as always.